All right, man, let's go. I'm back in my home setup. So, today we're going to go over what market structure is. We're going to dig deeper in a couple of videos as to what I mean in each step of my strategy. So, today is market structure. So, let's go over it. So, to start, like I said, if you watched the last video, higher highs, higher lows, we're in the uptrend. Lower highs, lower lows, we're in a downtrend. And I'll demonstrate this on the chart. Okay, so when you're in an uptrend, price is gonna continuously create higher highs and lower lows, and we can mark this out here. We'll do higher high, okay, and this is another higher high. And this is another one. And then if I continued it, it would be another higher high right here. And then boom. So then we have our higher lows. So we'll just go through and mark them all out. Just so you can see, give you a visualization. I mumbled that word, but yeah. So this is how you know we're in an uptrend. Higher highs, higher low. Higher high, higher low. Higher high, higher low. Higher high, vice versa. Okay? Same thing for a downtrend. So what I told you right here, I'm just putting it on the chart so you can get a better visualization, because I'm a visual learner. But yeah. So in this market, what do we have? Say it with me now. Lower highs. Okay, so we got a lower high here, here, and here. And then, what do we have? What comes after lower high? Lower low. So we got higher highs and lower lows. That's how we're able to identify the trend. And identify, yep, there we go. So take a screenshot, whatever you want to do for that. But let's go over it on the chart. Okay, so right here, we'll just we'll flip it to the not this one. It's a better visualization right here. So what do you see right here? So you see that price is continuously making higher highs, meaning we knew we're in an uptrend, right? Short term, we were in an uptrend. In this area, price was trending to the upside because it's consistently creating these higher highs and lower lows. Higher highs and higher lows. So let's draw it out again. On the chart, we got higher high. Okay. I'm going to just, yeah. All right, higher highs. Then what do we have right here? Draw it with the higher lows. Okay. And we'll just copy, paste, paste, paste. Boom, boom, boom. This is even a higher low. So that's just a visual representation of it on the chart. Okay. Now let's find the area where price was trending downwards. Okay. Oh, right here, perfect example. So what do we see? Price is continuously making new lows. When price continuously makes new lows, we're in a downtrend because we have lower highs and what do we have? Lower highs and lower lows. Okay, so let's mark it out. Let me get rid of this shit. Mark it out just so you can see. Lower lows. Lower low, lower low, lower low, lower low. Boom. So that's a downtrend. That's how we identify the trend. Okay. you want to make sure that you know what trend you are trading, because if you counter trend trade, you got to understand that, okay, you could take that counter trend trade, but it's less probability that is going to win over if you took a trade with the trend, because you're following the market. You got to think the market is going to move regardless if you're in or not. That's why I'm just catching little pieces of it as it goes. If I'm trying to counter trade, I'm losing, bro. I ain't gonna lie. I done tried to counter trade so many times, and it works sometimes, but for me, man, it's not for me. Not for me. But yeah. So then we'll get on to the next lesson. There's phases in the market, okay? There's 3 phases of the market. You have the market when it's trending, when it's ranging, and then once it ranges, it can fake out, and then it also can do a reversal after that, or it can go back to trending. So that sounds a little confusing, but I just drew it out right here. So the market goes from trending. So we go from, let's say we're in higher highs. Okay. The market's just not going to continuously go up, and it's not going to just reverse right away. Okay. So what's going to happen is price is going to consolidate. So that's our next little lesson. Consolidation. Remember how in the last episode I told you, if price is making equal highs and equal lows, then it's in a range. I don't know if I might have went over that, but you need to write this down. This is very important. When price is creating equal highs and equal lows, it is in a range. What does equal highs and equal lows mean? Equal highs and equal lows means that price is stuck between two levels, or let me just give you an example so I don't confuse y'all. So it's going to range. So you remember how I said higher highs? So we would have a higher high right here. Okay. Then we would have a higher low right here. And this wouldn't be a higher high because it's not higher than this one. And this wouldn't be a higher low because it's not above this one. It's equal. So it's equal lows, equal highs. So just, that's the EH. I know I kind of butchered it, but that's how it goes, okay? So we got step 1 right here. Step 2, it's in a range. Step 3, this could be a potential fake out. So what you need to know is, okay, fake outs. What are they? Fake out is when the market, I went over this a little last video, but I'm going to go in a little more in depth. Fake out is when the market decides to take out, like, okay, let's say we're in this. I'm going to draw it out again. Let's say you take a trade just because price retested this level and you're betting that it goes higher. What the market can do, let's say your entry is right here. I'm going to change the color just so, yeah, we'll do green. I'll change the color. Let's say you got in right here, okay? And you're targeting, let's say the next previous high was like up here, okay? And your stop loss is below here. So I'm going to draw this in red so you know. Okay. Yeah, okay. So your entry's right here. Let's say you get in, okay, fine and dandy, and then guess what? Big wick comes, you get stopped out, and then the market continues without you. That is what you call a fake out. I demonstrated this on the chart. I'm going to give some more examples. But that right there is a fake out, okay? Okay, so let's go back. We have step 1. Step 1, trending, okay? The market was trending right here. Then we got equal highs and equal lows. So what is that? This is ranging, consolidation, aka a range. Then let's say this is the fake out. So this is step 3. This is the fake out. And then this is a fake out, because one thing you want to write down, market can fake out on both sides And here's a side note. It does it more than you would think. Just from my experience, the market fakes out on both sides more than it fakes out on one side. Okay? It tries to take everybody out before continuing the move. Because they don't want to see you win, bro. The market wants to accumulate as much money as it can. So boom, there's step 3. Then what happens? Price could either, let's draw it down here. Okay? So boom, we got our range. So price can do one of two things. Here's step 1, step 2. Then we had our fake out right here and right here. Step 3, circle it all. Okay, just so you get a visualization. Okay, then what could happen? Price could continue higher. Okay, this could be step 4 right here. Or price could say, and we're going to draw this in gray just so it looks a little different. Price could say, nah, we want to continue lower. This right here is a reversal. So I'm going to draw it. Yeah. This right here is a reversal because price was in the uptrend. Okay, so we were in the uptrend. We consolidated. We faked out on both sides. Then price decided, hey, I don't want to continue to create higher highs. So I'm going to reverse to the other side. Okay? So that's what you need to know. That's the main thing you need to know about market structure. So let's look at some examples on the chart. Okay? So let's look at a trade I took today, actually. So I took ES today. Caught a nice, beautiful 1 to 2. Okay? And what did I do? What did I know? Remember how yesterday, can I just erase all this shit real quick? It's kind of aggravating. Okay. So what did I know? All right, yesterday, you remember how we looked at the NASDAQ and then, hey, NASDAQ was bearish. And it still is because technically it has not broken structure to the upside. But then I looked at US 30. And remember, I'm looking at this 4-hour structure. This is market open right here. So I saw US 30 not only did it was creating lower lows right here, but it pulled back and broke this. What is this level called? This was a lower high, okay? And this leads us to our next lesson. Price had lower highs and lower lows, okay? But there's one thing I noticed when I woke up this morning. Okay, I traded open, or not at open, but I trade during New York Open. Okay, so we knew that price was bearish, creating lower highs, lower lows. But what happened? You see how this candle closed above right here? That indicates our next lesson, which is break of structure. Okay, so let's write this down. Market, when it reversals are also called, reversals happen when price breaks structure from one side to another. So let's just do a new sheet. Okay. And then, okay, so can I see a break of structure on this chart? Yeah. Okay. So you see how this is a low? This was a higher low, and then guess what? Price broke through that higher low. Let me do it in a different color so you just familiarize it. So price broke through that, pulled back to that level, rejected, and this right here is that break of structure right here. Okay. So let's go back to the chart. So when price breaks structure from one side to another. So we knew we were bearish. Then what happened? Price broke and closed. Keep in mind, we're waiting for candle closures. Once we saw the 4-hour closed above that level, we knew that price broke this lower high and is now on an uptrend, because now look at this. This is now it's still a lower low, but you come back here and guess what? This is now a lower high. Oh, I'm sorry. I confused y'all, bro. This is a higher low. Man, I know it sounds confusing, bro, but it's not. Because remember what I said. In a downtrend, price is going to create lower highs and lower lows. Oh, I'm confusing myself. It is a lower high. Yeah. This is a higher low. This created a higher low. Okay? Sorry to confuse y'all. Oh, man. My bad, bro. So now we knew that price was on the uptrend. Okay? So back to what I said. Price broke structure. Where did it break structure? Right here. Because it closed above this level. Because remember, this was the previous lower high in the downtrend. Price broke through and closed above that level strong, indicating that, hey, price is done trending to the downside and it's ready to push up. Okay? So that was my bias coming in. So then I went to ES and I saw the same thing. Right here, you see this level? What is this? This is a lower high. This is a lower low. Okay? Then what happened? Price. Okay? It tried to break through right here. It couldn't. Okay, this is when we called that sell Friday. But then what happened? Come today. Price opened up here, okay? I waited for the 4 hour to close. This one, this candle right here. And once I saw it closed above this level, above this lower high, it broke structure right here. This is the break of structure on the chart. Okay? Price broke structure to the upside, indicating that price probably wanted to go higher. So I waited for that close. And I probably could have had a tighter stop loss, but I was kind of iffy on this trade. And I was in it for a while, bro. I think this was like a 2 hour trade. So I got in. Once I saw price held above this level, it made a range on a 5 minute. Remember what I said? Equal high, equal lows. See how all these candles are closed in between here? This is why I waited. Now, if I would have got an entry right here, this would have been way better, honestly, and I probably would have caught a better risk to reward. But this was fine. We still caught a 1 to 2. I made 1,000 on this. Pretty solid, you know. Great way to start off the week. But again, let's go back. Why did I make the 1,000 today? Because I was aware of what the structure was doing. I knew that price could continue higher because we broke structure to the upside. We had a strong candle close above this level. I waited for signs, and then boom. Now I'm going to get into entries in another video, but that's basically all you should know for that. Now let's go over examples of the market cycle, okay? So remember how I showed you right here? Yeah. Remember trending consolidation fake out? This. The same thing. You're going to see it on the chart. When I'm writing down like this, once you familiarize yourself with the chart, you're going to see this and you're going to be like, oh, okay, that makes sense. Just rewatch the video. Like I had to rewatch videos over and over to understand stuff. So what is price doing right here? It's trending to the upside, okay? So we got step 1, expansion, also known as trending. You know, it's trending. Then what happened? Price decided it wanted to stay between 2 levels, okay? For a while too, okay? And then we can even put the level up here. So this was the range. And then what did price do? Okay. Step 2. Then, I mean, you can consider this a fake out because price pushed up above this level and then rejected right below it. And then this also could be a fake out. Like I said, it could fake out on both sides. So we knew that this was that. And then price decided, okay, boom. You thought it was going to reverse, but it didn't. So that's why this is step 4, aka step 1, because they rotate into each other. Meaning the market was trending, then consolidated. It faked out on both sides, faked out buyers and sellers. Then it continued to the upside. Okay? The market's going to move in phases, and you're going to see it on every time frame. Remember in the last video how I told you, this is a 4 hour, every candle is 4 hours. Keep in mind, I also was paying attention to the daily on this. I'm going to remove all my drawings. Daily structure was bullish because why? Price is creating higher highs and lower lows. And higher lows. So that's why I was leaning toward bullish today. That's why buys work today. You got to understand the cycle of the market. This is a cycle thing. This happens over and over. It's going to happen on a smaller time frame. It's going to happen on a bigger time frame. Same thing right here on a smaller scale. We see step 1. I'm going to draw it out. Boom. Higher highs. Okay. Then what does price do? Creates a range. And then it faked out on the upside. If I had levels drawn, it would be a little clearer. But it faked out on both sides right here. And then guess what? Reversal. Reversal. So pay attention to market structure, okay? Because market structure will take you a long way. And if you follow the 4 hour on a micro, like just, you don't have to pay attention to all this. Like I said in video 1, pay attention to what's going on right now. What is structure doing right now? Right now, we knew that we were bullish because price held above this level again, okay? And yeah. What anything else I need to go over for market structure? Let's see. I went over higher highs. Yep. Okay. I'll go over a little more examples in the next video, but this is basically all you need to know about market structure. Just need to know, you need to mark out your higher highs and higher lows. So when you go on the chart, I want you to do this. Mark out your levels. We knew that price broke structure right here. Let me just draw it out again. Price broke structure right here. Okay. Now it's pulling back and it's probably going to go higher. That's how we're able to predict these markets. And we're only catching little percentages, brother. I'll go over the rest in more videos. But that's basically it for market structure. That's what I got. I'll have this note in the description. Make sure to follow my gram, and I'm going to be posting a lot more. I have more educational content coming. Appreciate y'all, and I'll see y'all in the next one.